Alright, so good evening and welcome to the India market review for 31st August, Friday. 4 more months for the year to get over. God knows where the time has flown, and so many good things have happened so far, touch wood. Right. Okay, want to keep this crisp and short and look at where the state of the market is from a slightly longer term perspective for about a few weeks. And look at what we can expect. So just to quickly introduce it, I'm going to very quickly go through the data Vidya created and generated about the state of the derivatives data after expiry. So this is for last Friday, not closing today, Monday, but I'm guessing it's going to be more or less exactly the same today or close to that. Second, we'll look at some events that are coming, and then we just look at the markets from a sector perspective and maybe some individual stocks. So very quickly, if you look at the derivatives FNO data, right? Open interest data. What you're going to see for the current month is that when it comes to index futures, and if you look at the who is sort of owning what on the day after expiry, right? This sorry, after the crash. This is not after expiry. This is after the crash. The FIIs were essentially, so this is a crash, a few days back. The FIIs were basically short. They were long on index futures, but they were short also on index futures by 39 versus 42%. But if you look at the future stock, then the FIs are clearly very short, and they have been short right through before and even after the crash, strongly short on the stock futures. So on the index futures, slightly bullish, but not by much, 42 versus 39%. And on the stock futures, strongly short of 47 versus 30%. And actually, if one looks at the data, the shorting actually increased over time. Very quickly to look at index options. If you look at the index option, and especially if let's say, just to make our life a little easier, just focus on the last 4 days, then you can see that the FI concentration is on the put longs, which basically means they have bought a lot of put options, which means if the markets go down, they're going to have a lot of protection. And essentially, those who are on the put short side are the individual clients and HNIs, which is really interesting and fascinating data. On the call side, the guys who are really long on the calls are the individuals, and those who are short on the calls are also mostly individuals and to some extent proprietary traders. So both on the stock futures side and the option index side, the FI view is very clear. They are bearish on the market, right? Yeah. Did you send any other one, Vidya, after this? Okay, I'll finish this and maybe I'll just open that. And on the stock option side, right, there is really not much to say because uh, on the stock option side, there is not much FI participation, and it's basically the clients who are participating here, retail guys, and the proprietary traders. Okay, there is some other data. Let me just bring it up. All right, so so that was data before the crash, and then this is data basically after the crash. And what you can see here basically so this is data for 28th, so this is till Friday now. And essentially, at least on the index futures, this is the same pattern. Very strongly long on index futures, 63%. And those who are short is basically the clients, individuals and retail, etc. And when you look at stock futures, well, clearly the same pattern continues. Very strongly bearish on the stock futures. 49% of the shorts are by the FIIs. Then the domestic institutional investor. This is quite interesting. I haven't seen such strong short positions by DIIs ever since Vidya has been sending this data. And the stock futures long is basically held by individuals. Then we look at option index, and well, more or less, I would say the same data. You can see here that they are one second. So they are long. They are long on the uh, calls, but they are also very strongly long on the puts. So they are primarily buyers of options and they are not sellers of options. So you can see that long 40% but short 58%. So same thing, and this time including DIIs. If you look at it, one would say overall the view seems to be, or the position that the institutions have is on the bearish side, right? Just a second. All right, so I think the view before the crash happened and then after the, actually I don't even know why we're using the word crash. It doesn't deserve that word. After the correction happened and after this bounce, so let's get the Nifty now. It's including today's data, right? So even after this, even if we ignore this today's data, uh, this move up from 7750 to 8050, very clearly the FIIs and the institutions are on the bearish side, right? Just to make this very clear. So if you look at it, we've got this big gaps in the Nifty itself, partially closed, of course. So we'll have to see. Mm, okay. Okay, so we have all these gaps and all the way till 8,000, about 225, and then even till 8,350. But in terms of derivatives, you can clearly see it's on the negative side, and you can also see the move up has clearly happened on much lower volumes. So overall sentiment is clearly bearish. So that is, I think, overall the assessment that is there. Institutions are clearly bearish, and including the DIIs this time, right? And that's definitely, at least for me, new data. And I don't think, if Vidya, please correct me if I'm wrong, we've not seen that sort of thing for at least what, 6 months, at least ever since we have been tracking that data. They might have been, but we haven't seen it. Next, coming to, yep, thanks for the confirmation. Uh, the events that are in the horizon that we need to look forward to and keep a track of. So on the 17th and 18th of September is the FOMC meet, right? And it's going to be a really interesting and on the 19th the minutes will be released, and 19th is a Saturday, so we will react on Monday 21st September. Of course, the rest of the world also will do that, right? Given what's happened in China, there has been some talk in the media about whether FOMC or the Fed will actually increase rates or not, and then there have been some quite mixed voices coming out from the US various Fed members that yes, it would happen. Some are like not so clear. There are some members talking in the next few days and all. But leaving that aside, we'll just have to wait till 17th, 18th, and then of course 19th to know. All right. So we'll just do that, and after that only there will be, I think, direction to the market. Then we've got some local events. We've got the Bihar elections, right? And that is basically in I think October is the results, or October is. Does anybody know? Whatever it is, the the reason is why I'm saying this uh, is as far as the reform process in India is concerned, seems to have basically, sort of slowed down, come to a, I wouldn't say come to a halt, but of course not much is happening, as we all know. And I think the governments everywhere, at least the national government, Modi and all, are going to basically look at, getting a sort of mandate from Bihar and then be able to uh, push through reforms. But whether that will happen, so we'll have to wait and watch, because there's really nothing happening great on the fundamental side in the country, at least nothing that I'm aware of, which is going to be a trigger. So basically, we're trying to figure out what the triggers for the market are. Are they bullish or are they bearish, right? So let's put it here. Okay. And then there is the noise about GST bill. Will the parliament be reconvened for this, right? And essentially, for in order to do that, you'll have to get the Congress side support and the other guys. And at this point, I don't see that happening, right? So overall, we've got these four things, and none of them, if you notice, are actually what do you say? Uh, Bullish in nature, and more or less the view would be quite bearish. There's also, if we may add, the very good analysis that last quarter results, the profits have increased because of reduced input prices. So input costs. So we're talking about commodities, crude, etc., and not so much, and not due to increased sales. So essentially, your margins have gone up, and nothing else. You really don't have an increase in the revenue, which would indicate that there is more buying of products and services, right? So okay, this was the article I think most of you would have seen, that was sent by Ravi Challu. Never met him actually. Talking about how when the markets, whenever the Fed has actually increased the rates, the markets have actually gone up. Very interesting, right? From 1972 to now, and whenever the interest rates have gone up, the markets have tended to go up. The very sort of opposite view of uh, what tends to happen, it seems, in our logical thing about, oh, markets will tend to go down. So this is interesting stuff, because if the Fed increases the rate based on this chart, then we should expect that the markets would go up. The thing is that this is, however, about the US markets. I wish there was some chart here about the Indian markets, and that would confirm, correlate, or disconfirm this. But having said that, if the US markets go up, then, well, our Indian equity markets would probably go up. There isn't any reason. Having said that, if the US increases the rates, then money outflow happens from the FIIs, and it's like you can argue it both ways. And I think we've got 3 weeks to maybe get more data, information on this and related associated things, and you can take a review of that later, right? So this is something to keep in mind in terms of, if there's a bullish trigger, then it is perhaps this, but again, this is at least 3 weeks away. Okay. Uh, so now coming to the individual indices. So as you can see, the same behavior in the bank Nifty as it is in the uh, Nifty itself. You have clearly this gaps which are there, which are at this point, I don't think, in any mood to be filled, and we'll just have to wait. So on the bank Nifty, we are looking at a low of 16,700, and it could go down to maybe even 15,000. I think this is a number we mentioned it in IMR a few days back, also a few weeks back. On the upside, any move to 17,500 should be used to short, and also please note that you've got this series of moving averages on top, which are going to act as resistances for the bank Nifty, right? Okay. Okay, just the order it's coming. So we have BSE Power Index, and well, that's clearly had a nice, very strong recovery, very strong confirmation, but the very small gap which is there actually here is still not closed, right? All right. So that's on the Bank Nifty, sorry, on the BSE Power Index, and that's a gap which has not been closed. And today we've got you can see while it's been going up, the body of the candles are becoming smaller, 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 and then when it falls, the body of the candle tends to be quite strong. So overall, in terms of sentiment, the bears are still over a longer term period quite strong. Okay, 1 second. Need to go up. Look at the BSE Auto. Well, big gap there too. And you can see that on the day of the gap here, and also on the BSE Power Index, I think they basically broke down from the 200-day moving average also. So these are now firmly below the 200-day moving average. In this, as a matter of fact, you can see the auto, unlike in the Nifty and the Bank Nifty, where the recovery went and closed that window partially, this did not even do that. Okay, and relatively speaking, little more weakness there. Consumer durables. All right, this is definitely interesting. The consumer durable space, and Diwali is coming, so wonder, is this a place which could be long, right? Is something that one has to think about. Let me just put it in my notes. Indices. Okay. Sector indices. So I'm saying very healthy recovery, and the question is this a place to go long? Okay, so that then capital goods, well, quite hopeless, as you can see. Not only the gap, but the recovery itself is very weak. And there is this idea in technical analysis that some of you would have been aware of, that unless the when you have a big red candle like this, you can only start thinking about a recovery when it goes through more than half of this fall, right? Go back to your candlestick notes and look at the sort of recoveries we call on neck, in neck, and a thrusting move, right? It needs to go through more than half. It clearly is not able to do that. And if we take the weekly chart, you can see that, as a matter of fact, it seems to be continuing on its way down. So 15,500 on the BSE capital goods is something that could uh, clearly happen, right? So this is something to watch out for. You have an immediate support of 15,900. We are at 16,150, but below this, then we could easily go to 14,500. Of course, not traded the index, but LNT is a big guy in here, and that's what perhaps you would be looking at. FMCG is a mixed bag. You have a recovery, but that recovery is basically being constrained by these moving averages. Uh, Definitely not a recovery as healthy as the consumer durables space, but nonetheless a recovery is there, and it could break out, but at this point the chances of it being able to do that, I think, are quite slim, right? So, all right. So this is where we are, and looking at weekly chart again, trying to see if on a weekly basis if there's any. Uh, of course, for this week it's too early to say. We're just in the Monday. I completely aware of that, but it's trying to see if there's any glimmer of hope. But none, and this also needs to be shorted on the way down. And again, remember, poor monsoons. At least the rural side of India is not going to be contributing to growth, looks like this time, for the FMCG stocks. It'll have to be urban, and on the urban side, yeah, again, I don't think we have anything really great. Okay, healthcare is definitely recovering today. The first sector we have seen, which has a nice green, healthy, pun unintended, green candle, and looks like this is the only place where we've got some bullishness, right? Yeah, healthcare space. One second. So this is a place not to short, right? And look for long positions in good quality companies. Having said that, if the market does come down, remember that this is also the place that is going to come down, albeit not as much as perhaps capital goods or the bank Nifty, perhaps, right? And even the power stocks. BSC IT, hmm, uh, recovering, but again down. And in spite of the rupee depreciation, this is really going nowhere. But having said that, IT is range bound. Can't say it is in a downtrend. Um, just to get back to healthcare. So healthcare also range bound. Can't say it's in a downtrend. If we were to put a trend line at this point, then we could put one, let's say this way, for healthcare, and observe how that okay. And then FMCG is overall down. You can also put a trend line this way, and in many time frames it would be lower tops and lower bottoms, right? uh, Capital goods is clearly down, bank nifty and nifty also clearly down as we saw, right? IT sideways, capital goods has some strength, etc. Then we come to metals, and in metals this is again very interesting because in metals we've had a 4-month bearish divergence, which really, was on the MACD side, is what I'm saying, not so much on the RSI side. And then we've got this sort of capitulation that happened in the metal space in the last 3-4 weeks, right? And what's very interesting now is that this is one more place that you actually have bullishness that is at least showing up. And while the MACD is in extreme negative zone, you have it. Yeah. So let me just. This is where the MACD is. And this is really interesting, guys, right? So I'm just going to, this is, all right. So if you look at only MACD here, that's the level to say watch out for. Then what is very obvious from 2012, etc., is that the MACD went down here, and that is what is called a mega oversold. In case you've forgotten, you've got a big mega oversold here. But remember that this mega oversold level was the end of the crash, right? And you had a mega overbought here. Right now, after this move here that happened on the uh, uh, metal index, that was in August of 2011, which is 4 years back, we don't have the MACD come to those levels again. Even now, it is quite far from that, right? And at that time, it did not stop, the mega oversold did not stop the fall, and the fall did continue, but it did sort of stabilize for about a year after that. And then you had another fall, and right now we're coming to that mega oversold levels. Now, doesn't mean too much right now, because remember we came here and you can see that the market clearly fell again after that, right? uh, One more point to point out, we also came here, but and this time the market very nicely bounced back. As you can see from here, it just bounced back. So about 4 months apart, one low on the MACD, and it went lower, the other low on the MACD, and from this was where it bounced back. And this is where the market is again, right? And if I were to make this weekly, let's see if we can get any further insight. um, okay, on the weekly chart, if I had to put these levels, then this is the lower level I would have to put. And what you can see is that that is where we are again at this point, right? Just trying to put a different color. Okay, right, we are again here at this point, and we seem to have on a weekly chart, right, got a green hammer. Everything else, if you remember, was a red hammer. I'm not saying that's a big deal, but that's just something to notice, and I'm wondering whether that means anything. Are you seeing the worst getting over in the metal space, at least for the next few, sticking my neck out and saying months? So in spite of the overall market showing extreme bear, not extreme, but quite bearish conditions, are we looking at perhaps a bottoming out in the metal space? As we know, metal commodity prices have drastically fallen, stock prices have drastically fallen, but There's something called sector rotation in the market. There's something called money moving in from one place to the other. And I'm just speculating here. I'm not really saying this on basis of any fundamental data. It'd be worth looking at it. Um, Balki is not here, right? Okay, anyhow, that you could be seeing uh, technical low, at least, if not a fundamental low on the metal industry and the metal space. Also, unfortunately, I don't have FA data here, but we did see it last time. The metal index is at the lower end of its valuations. Anything down will make it quite attractive in terms of buying it from a fundamental perspective, right? So I think these are things that we need to keep in mind, right? I think I'm just thinking it's time to have some sort of an investment roundtable, a BIC investment roundtable summit in the next few, I don't know, weeks, and find some potentially good long-term investment stocks. I think they are emerging from the depths to say, and they're going to pop their head up just a little bit. Early days, but it's coming, right? Maybe we should schedule one after the EQNS is over, so maybe sometime early October, right? So watch out for that. Okay, that's the metal space. Interesting. This is showing this sort of behavior. Just going to put down and say BSC metals. Are lows being formed. There's also the other thing, remember that the market tends to discount the future by 6 months to 9 months ahead, and the fundamental recovery will not be seen, but the technical bottom in the market would have happened, and everybody is wondering, why are things not getting worse on the price? But the market has already sensed that fundamentally things could be improving, maybe a few quarters or 1 or 2 quarters down the line. This is a well-known, a slightly deeper, a more subtle concept, which is there in, I wouldn't say it's well known, but definitely a deeper, subtle concept in technical analysis about the discounting period, anything from 6 months to 9 months, not more than a year. So even though we don't see great news, nothing visible, fundamentally the market obviously and always knows more than what we know and we will ever know. And well, we just listen to the market. Uh, I'm just going to put some points here. Rotation. Mm, right. Okay. Mid cap index, well, Nifty, mid cap, BSE, Nifty, Nifty Junior, all the same thing. Good recovery, better recovery in the mid caps actually than the um, Nifty, I would say, right? I'm talking about the way and the amount by which it has jumped, at least visually, but nothing more. PSUs almost ditto picture as Nifty. Realty, again, very, very interesting. Is this not reality? This sort of almost bullish engulfing. It's actually a very big harami. And the point, however, is that the gap here is closed, right? This is the only one where we have seen BSC reality gap closed. Guys, this is something really, really interesting. No other sector has shown us this so far, at least. Right? Gap closed, very swift, very smart recovery, um, and and uh, this definitely deserves more attention and more analysis. But have a look at this, right? It's let me just. Sorry for switching the screen so many times. I think I saw something. Yep. Mm, 33. All right, for whatever little it might be worth. Okay, let me just make this bigger. So we have the RSI now. Okay, and what you have is this level on the RSI. Okay, which is more or less flat. And if I were to make it very accurate, then let me just put it here. And on this side, we have this. Okay, and that is clearly a bullish divergence, right, on the BSE Realty Index. And this is, I'm wondering where the strength is coming from, but we just saw how the BSE Realty gap is closed. We saw the strength in BSE metals, and I can't help but comment, but if you remember the last almost 1 to 2 months IMRs, we've been talking about how there seems to be a base forming or a low forming in the metal space, in the power space, in the infrastructure space, and in the realty space. And we haven't gone to everything, of course, but at least in terms of metals and realty, this is adding to that evidence. So we have this wonderful recovery, weekly chart, but like I said, most important issue that the gap has been closed. And to just point out the gap, that's where it is. So again, fundamentally, there is zero good news as far as reality is concerned. What is it that the market knows that we might be missing out on, in spite of making live lows almost, right? Didn't actually make a live low, but almost making a live low. And this would be an extremely good, almost double or triple bottom that we're looking at between 2013, 2014, and then 2015 on the realty space, right? Um, I can't help but think that we need to do some urgent review of the realty stocks and perhaps the metal stocks from a fundamental perspective. I am more or less convinced that we are missing something on the fundamental side. The market, the media is not reporting it. At least I don't see any headlines positive about realty and metals. And we need to look deeper, dig deeper, because we might be looking at a bottom here to actually go long on, and we might be totally missing out on an opportunity here. Of course, I think only 6 months later we will know whether we made a good call here or not, but it definitely, at least if not buying for academic reasons, deserves a lot of our time and attention, because some lessons learned here are going to be extremely useful lessons in the, I think, for the rest of our life, if I could, maybe exaggerate a bit. So very handsome recovery, gap closed, definitely a place to watch. And then which makes had this do not short reality, right? Short the Nifty, short the bank Nifty, short capital goods, but do not short healthcare, do not short metal, do not short reality, right? I am very surprised at these findings. I did not expect this at all today, right? Uh, Let me just set this back. Okay. I really need to move over to, I think, AMI broker and all. Okay. All right. So here's the other thing. Again, let me go to weekly. Minus 34. Oh, hi. Okay. Just wondering. Hmm. I'm just looking at MACD here. You can see that's minus 20, minus 53 here, and we had the low here. and then we have minus 26 here, and we have a lower low here. But the only problem with this is that the time period is almost 3 months apart, and well, let's see, 26 day moving average, 26 days, 20, it's about 1 month, 1.5 months, but this is like 3 months. So I was looking at whether to see, but you know what, this could be looking for evidence which is not there. Just wondering whether there's a bullish divergence in MACD. I don't think so, but I think the bullish divergence on the daily chart on the RSI is extremely clear, right? So, well, interesting. Well, my head is spinning with what I'm seeing, but then we've got small cap index, good recovery, stuck at the 200-day moving averages, and we'll just leave it at that, because I think in a bearish market, the mid cap, small cap stocks are the ones which will fall the most. And anyhow, there's nothing you can do about them. You can't short them in terms of wanting to make money from that. The only thing is, if you have any long positions in them, one should be looking at getting out. Okay. uh, These are the longer term of the BSE 500 index, BSE 200, BSE 200 or BSE 500 almost ditto in charts, nothing much to say. You can see that the broad market also is quite weak now, and we have a big what gap there, and this time the recovery is not as healthy as it was seen in the other sector indices. So the broad market looking like it's weaker than a lot of other things. Uh, Normally we never see this, but anyhow, since it's there, something very interesting to point out. This is the dollar index, the Dolex, all right, and you can see that the FIIs in 2008 peak, they're still not making when you consider the rupee price fluctuation. So even after 7 years, anybody who bought at these levels, not FIIs, sorry, anybody who bought at these levels, and if you remember, FIIs were selling at that time, but any FI that did buy at these levels and are still holding today would be cursing why they ever came to the Indian markets. Okay, just quickly. Okay, CNX IT, since it can be traded, uh, not yet done the gap recovery, as you can see. So that is something to just keep in mind. CNX mid cap, same picture. So this is the Nifty Junior, right? And that's the gap, really no recovery. And well, here's something just to keep a track on later. You have a very nice tweezers top right there, right? You got a very nice tweezers top right there, and just pointing out, patterns that one could have been looking at and maybe using. Right, CNX Energy, right, and no sign of recovery. So we are at some very important support levels, multi-year levels, right from 2011 onwards. Uh, Crude oil has gone down, and today, by the way, uh, petrol down 2 rupees, diesel down 50 paisa. Uh, so tomorrow morning, petrol fuel will be a little cheaper. Okay. All right, so there we are as far as the energy stocks are concerned, but they're falling up and down. So not none of the fundamental good news on the energy side is actually rubbing off on this. But again, the CNX Energy is a mixed bag. You've got ONGC, OIL, and you've got BPCL, HPCL, and all. I really wish we had two separate indices, oil marketing separate and the oil drilling separate. But anyhow, FMCG. Right, so we saw BSE FMCG, CNX FMCG also. You can see that actually, first of all, there is no gap right here in this one, and if there was, it would have been closed. So this is another useful pointer to where strength is possibly there. Infra. So CNX Infra Index. Well, the thing about this was that it was close to its life high, but this is from 2010 and therefore does not represent the 2008 levels. Some recovery, but again, weekly chart, hammer, gap, and today we've gone down again. So it's the same pattern over and over again. It's the other ones that are surprising me, and my head is still wondering what happened in power and what's happening, not in power, in reality and metals. Okay, all right, interesting. MNC, interesting because, well, obviously I haven't seen it for some time, but it made a new life high. It's come down. It's above the 200-day moving average actually, and this could still be showing some strength. So the MNC stocks. Pharma, CNX Pharma, we already saw healthcare, but this is only pharma. And you can see a nice green candle today. Almost everything else was red, but volumes is something not so great. And I think that's it. Okay, PSU banks, distinctly different from uh, the private sector banks. So you can see recovery happened, but you didn't see the green candles that you saw everywhere else. So definitely some bad news, which is still very much embedded in this sector. Fundamentally, however, don't forget the recapitalization thing on public sector banks, and they are at what, almost 3 year, 2 year low now. And from a valuations perspective, just finished a FA weekend with the latest EQNS batch. Valuations perspective, PSU banks are, some of them are at 4x, 3, 5x valuations, and um, otherwise the average is around 15, I think 13 to 15. I don't have the band, of course, but again, the recapitalization thing is going to put a lot of life into these companies in the next few months and 1 or 2 years. There is actually a schedule that the finance minister put out about which bank and how much it's going to get in which year. I don't know if there's a particular date or a quarter. Somebody might be interested in digging that up and keeping that calendar, as it were, to know, when the trigger times windows would be possibly for these banks to actually start going up. So at some future point, really good, great fundamental buys. All right, CNX Realty, just like BSE Realty, you're seeing this closure of the gap. That's the thing. All right, it was completely unexpected. That's the gap that has come, closed, and that's what I'm saying. Are we looking at bottom here? And this is like, again, uh, uh, double, triple bottom. One cluster here. This was a triple bottom, as you can see. 1, 2, 3 went up, came down, maybe a single bottom, but over a period of time, 3 bottoms. Just to compare this with BSE Realty. Right, where did it go? This is over a longer period of time, right? So this is including the 2009, 8-9 crash. The CNX Realty does not have it. And from that perspective, we are at lows below 2009. But this is the triple bottom we're talking about, 2013, sort of twice. And then this bounce here in the last 1 or 2 weeks. Okay, I think we are done. Yep. Just look at the VIX. Actually, this is the wrong way to look at the VIX. VIX is a range-bound index actually. Okay, so this is the VIX. It's going to give a headache to some of us. Um, so the VIX is a volatility index, and that shot up, when the crash happened, and it has cooled off. But having said that, it is still on the higher levels. That means a lot of anxiety still there in the markets, and this is not going to disappear soon, in my opinion, right? So when it's lows is when the market tends to be complacent, and when it's high is when the market tends to be extremely fearful. But then once it comes down, then things tend to start looking good again. uh, if any of us want to do that, then remind me to do that next time. If I start this conversation now, it's going to take a lot longer to overlay the VIX index on the Nifty, and then correlate volatility changes on the Nifty, right? So that would be what would be nice to do, right? Okay, so that's it. Oops, almost 10 o'clock. So that's it, guys. I'd like to stop here, not get into individual stocks. Um, Capital goods, uh, Nifty, Bank Nifty, good shots, right? The thing that I'm not able to reconcile right now is if the Bank Nifty or the Nifty, forget a 2,000 point fall on the Nifty, forget a 25%, even if a 10% further fall happens, what about metals and what about reality? Am I saying that they will not fall? That seems to be a little far-fetched, right? But given what we have seen, I think it'll be really interesting to see. Uh, the thing might be that you would get these falls that will happen, but you'll get very swift recoveries in these two places, metals and reality. I think we already saw that last week with the gap closure. But if you're watching any stocks individually, for example, I was looking at GMR Infra. Those in the Wealth Lab know why. And it just fell from 12 rupees to 11, bounced back, then fell to 10. So tempted to take it, but the market was so weak, and then it went to 980, and I'm thinking, oh god, it's becoming a penny stock, and who knows, it would go much lower. But guess what? It's now around, it went to 12 plus, and now it's around 1150. It's like a 20% recovery that happened on stocks like that. So if you went and look at DLF, Unitech, or any of these places on the metal side, I think you're going to see these very strong multi-percent, 10, 20% recoveries from their lows, which you will not see in many of the other um, frontline sectors and stocks. So just pointing out, some good stuff which might be appearing. Um, yes, Bobby, what is this PG Electro Plus? Something you want to add? Open up your mic.
I was just saying that when it hit 7,700, no, and
Hmm.
actually I looked at the time, it was at 7,700 for around 2 hours, and because the markets
What?
had crashed, if you had actually, I'm sorry,
You're saying Nifty at 7,700?
yeah, last week,
Okay. Huh.
it was there for around 2 hours, I think it was. If you
Okay.
actually look at the intraday of this thing,
Hmm.
so within those few days, I mean, actually, this is something I mentally made a note of to actually do, like put
Mm.
triggers on BASF. Couple of stock. I had like two or three handful of stocks,
Right.
which I said that I'd written it down and I said that if it reaches 7.7 or 7.5, it's worth it, and there'll be a coinciding of the Nifty and the support level of a particular stock.
Right.
The thing is, it happened at 2 hours, and yeah, I mean, you got to be emotionally clinical.
Yep.
You understand what I'm saying? So a couple of stocks which I actually, uh, they swung by 50, 60% in a
Mm.
matter of few days.
Okay.
So, but it takes a different level of, I suppose, uh, equanimity
Yep.
to capitalize on, because the Surya Roshni and BSF was something. PJ Electroplast, because it's a weak stock, I probably wouldn't, might or might not have. But
Mm-hmm.
BSF and Surya Roshni, I just like, when you shouldn't freeze.
Mm,
You should just put in the this thing and do it. Because Surya Roshni, it came and hit exactly 105
mm.
and went back to 130 or something in like 2 or 3 days.
Okay. Great. Thanks
So
for that input.
yeah.
Anything else?
I'm to the mentorship group, and I'll probably I'm sending out a mail of my decisions after doing a lot
Okay.
of digging. So the guys just take a look at it.
All right. Great. Okay. Thanks, Bobby. All right. So Vidya, I sent this link on Business Standard. Thank you so much, Vidya. Just been quickly scanning it. It says metals on a recovery path, potential to go up further. And well, according to this guy, who's this guy? Andrew Cole, principal analyst at Metal Bulletin Research. Might be worth googling it and checking it out. He says there are several fundamental reasons which will potentially provide support based on which metal prices could recover. According to him, the fundamentals for each base metal are different, and that will play a role in how they trade after this long route down to multi-year lows. Take copper. There are enormous unplanned supply disruptions this year. Producers are consciously cutting back and lowering guidance too. TCs and RCs, no clue what that is. Does anybody know? Are still under pressure. Stocks are not particularly high. Premiums are rising in China. We are yet to see positive effect of many of Beijing's stimulus efforts on demand. Dollar strength. Dollar strength may be undermined if the Fed delays rate liftoff in September. The LME is backward dated. That means future contracts are trading at a discount. Dominant holders have re-emerged, and extreme speculative stock position raises the risk of short covering. Right, that's a long list of potential upside risks to prices in the coming few months. All right, okay. Uh, so basically, supply cuts, right? Unplanned supply cuts, um, discounts right now, but dominant holders have re-emerged. The people who tend to be strong in that particular stuff, and extreme speculative short position, right? And shorts have to be covered, and the buying that could fall. So sorry, that could follow. Falling crude oil prices and was up 18%. However, okay, that was something we were discussing today. Uh, this guy Abhishek Deshpande from 96, he says London-based commodity research house says most of the support we believe is due to the short covering after the rapid sell-off in oil earlier this week. Well, here's the thing about short covering. You get short covering, you get the uptick in and sometimes 10, 15, 20%, as we have already mentioned here, move in the underlying, but then after that there are no long positions to take it further up, and then it just again can drift down or could be shorted again, right? The short covering is basically to lock in your profits, but then unless there is some long-term fundamental buying, the prices are really not going to go up, right? And then okay, rate cuts in China, Brent has gone up. All right. Following sharp recovery in metal prices, metal company share prices in Indian market have also shown a spurt in the last few sessions. All right. Mm, all right. So fine. This is, I think, what for me was the most important thing. This particular paragraph, right? But I'm wondering something a little different, which is could metal prices actually bottom out, because there could be some sort of a fundamental recovery that has happened, or a resetting of demand supply. As I'm reading this, I'm thinking that supply cuts and demand still the same, or maybe even a lower demand but supply is cut more than the demand comes down, and you have a stabilization, if nothing else, in the raw material and the finished good prices, and then these stocks will, well, just start to bottom out and be extremely good places to buy, right? So thanks, Vidya, for this really good food for thought, and we just have to keep watching it to see how that moves. If in India things like GST and all recover, GST gets passed. If even if it's not, in the next 1 or 2 months, maybe in the budget session, that could be a boost. Some reforms happen. Bihar happens in favor of BJP. We really don't know. So thinking a little more fundamental here. We'll just have to, I guess, wait and watch. Right. Okay, so like I said, I think time to do a lot of homework, find stocks that could be bought at lower levels, but looking at overall, I think the large cap pillar indices, we are looking at shorting them, but at the same time, we are looking at finding some really useful opportunities, I think, in um, those of us who want to, build any portfolio and basically take it from there, right? And like I said, realty metals are the place. Healthcare, IT also looking good, and capital goods and power and all really looking pathetic, right? On the power thing, just a uh, point. I got a message somewhere. It was in the news somewhere. Um, Reliance Power is closing down some of its UMPPs and trying to get Power Finance Corporation to buy them out and all of that. Now, good or bad, that apart, if that does happen, for the fundamentals of Reliance Power, that would definitely be a good thing. The health of the balance sheet would improve, and you could see, re-rating of stocks like that. Also, just to point out things like Suzlon and DLF, which have sold off assets to pay back debt, and that fundamentally improves the quality of the balance sheet, and the stocks then don't have a fundamental or less of a fundamental reason to fall. Not that they can't, but companies are engaging in this, making their balance sheets healthy independently of what the economic situation is. And many of these sectors like power, infra, metals, realty have realized that they took on too much debt they should not have, and they're correcting that irrespective of what happens to the economic growth. So economic growth is just going to make that recovery for these, the fundamental recovery for the stocks, even and sectors, even better in time. And this is a very slow process, 1, 2, 3 quarters, something to keep that in mind. The timelines are very different from what we sit and do and watch the screen every day, right? Okay, so that's it. Thank you so much for your participation. I'm really surprised at today's session. I think it's given us a lot of food for thought. Would really request everyone on the session and who watches the recording to, start looking at the broader picture. And if you find some interesting articles like what Vidya sent, or anything to build a stronger fundamental story, both negative, it doesn't have, I'm not looking for anything bullish, not looking for anything bearish, just looking at the fundamentals now. I think the technicals there's nothing, there's not much more to do on technicals. Of course, we can and fine tune, but the overall picture, I think, is clear. If you can put a fundamental base to this whole thing for the next 3 to 6 months, we are looking at, in my opinion, a possibly once in a 5-year opportunity to be getting into some really good quality stocks at low prices, which means, by the way, that let's say this happens in the next 6 months, 2 to 3 years from now, we could be sitting on anything from, I don't know, minimum 30% profits to 100% plus profits on spot positions. And those of us who are willing to take the risk of leverage, then we could be looking at much, much more than that. And I'm talking about an overall portfolio basis. I'm not talking just about your trading account. So I think it's really worth pulling up our socks, spending as much time, and I don't know, just feel like I wish had more time or could run faster, learn faster, research faster, do whatever is required, right? So let's see. what happens, right? So thank you, and
I've
yeah, go ahead, Bobby.
yeah, I'm sending out an email. Think Gyani, most of the guys in there, just take a look at it.
Hmm.
I mentioned the stock picks and the trends and a couple of books, and just take a look at it. And if you just let me know your feedback, and I just want to like to say it on record that like the power sector, I've been doing some reading up on the and this LED thing, right?
Mm-hmm.
Just take a look at it and actually track the LED first, and then the power sector transmission. I've sent emails and things because those changes are real. The thing is, right now it's not reflecting, but just take a look at it and let me know because I really feel the power sector maybe not right now, but for the next few months it's and if you have a time period of a year and a half too,
Mm.
transmission and distribution is going to be huge. Just
Cool.
just take a look and then let me know. I'm sending it
Yeah.
out right now.
Okay. Thank you so much. But I'd also, I think, in addition to that, just look at maybe coming and doing a proper, not a proper presentation, but just share your thoughts. And I think that just make our life and everybody's life easier, and then also allow for a debate and a discussion to happen. Right.
Okay.
All right. Cool. All right. Thank you, Vidya. Thank you, Srinivas. Thank you, Bobby, and whoever else. Some have disappeared, and would put up the recording, and then we will hopefully reconvene on Friday again, right, for the IMR. Thank you, and have a great night.